Everybody. So what I'm going to do is cover the retirement calculator today. So the retirement calculator can be found in the link below. But what this does, you can see below is here how it looks. It's a chart. And it's got some areas here that are calculated in. Now the first part is determining how much you need to retire at a certain level of expense. So let's assume that you figure in by the time you're 55 or 60, whatever age you want to retire at, you're going to need $50,000. Or let's say you're going to need $60,000 per year. So you can change this cell. And what that will do is it will change the amount of the value that you need to retire at. Another important area is to determine the amount of your dividend rate. Each portfolio has a different dividend rate. You can focus on stocks that deliver dividends or you can focus on stocks that do not. What you need to do is determine the amount of dividend rates you can receive on your stocks. So anywhere from 2% to 3%. Now you see if you change this to 3%, you can change that right there, you'll see that this number drops quite a bit. And if you want to be conservative or somewhere in the middle, you can say, okay, 2.5%. So the first part of this retirement calculator tells you what you need to get to a final portfolio before you can retire on dividends. Now you also have to calculate the tax rate, but what I've done in here is I've calculated the net of tax rate on the dividend rate. So if you haven't already done so, you should adjust your dividend rate for taxes. Now let us say that you need to have $2.4 million to be able to retire at 2.5% dividend rates to have a $60,000 revenue portfolio. So how many years do you have to get there? So here is what we're going to say. We're going to fix the amount that you can earn or that you can contribute each month. And this is what we'll show you how to earn. It will be anywhere from 8% to 12%. If you're more conservative, you can go with the lower rate. If you're more aggressive, you can go with the higher rate. In our opinion, you should be able to earn a minimum of 9% following the ETF strategy. Let's say you're only able to contribute $2,000 per month. By the way, all of these formulas you can change online, but you can also, even better, is you can download this file and use it for yourself. You can save it on your computer and even look at the formulas that we have built in to calculate how these things work. So this is now $2,000. So you're calculating, let's say you assume that you can earn or you can contribute $2,000 per month to your retirement. And this is what we call paying yourself first. So if you're able to save $2,000 per month and regularly put that into your investment account, we'll show you how to earn 9% to 12% rate of return. Now, what this will do is it will show you how many years you need at that rate of monthly payment to get a final portfolio of $2.4 million. And you can see here that you need 26 years or you need 307 months. And what you can see here is very interesting is how much you've earned in interest. So this is the capital. Over these 26 years, you will have invested $614,000 in capital. But what's very interesting is you will have earned $1.785 million in investment income over the same time. And you can see that this is basically 3 times this amount. And this shows you the real value of investing. Let's just quickly change these numbers a little bit. Let's say we have 2%, so you got to get a larger portfolio. And let's say that you're going to earn 10% instead of 12. So you can see here that this amount has gone up, but since we have a higher amount here, or a higher rate, we still have 26 years. But what we can see here is, look at this difference. We've now earned 2.4 million compared to 625,000 of contribution. So we've earned basically almost 4 times the amount that we contributed within a number of years. And this is really the true importance of time value of money. For example, if you put this into the bank, instead of having a final portfolio of $3 million, you would basically have a final portfolio of $625,000, and you would not be able to retire on that. And this is why you need to follow the investment strategies that we provide. And this is why it's critical to pay yourself first. This far outweighs that. And this is what you need to start working at, and that's why it's critical to follow this. Here is how your portfolio works. You can see that it really has an exponential growth. And this is because your investment is starting to work for you. Now, why does it flatline here? It doesn't actually flatline, but that's the point where you're going to stop making payments to it. Now, it's also important to note that you're still going to be earning 10%, but now your dividend rate is 2%. And what you're going to do when you retire is, instead of reinvesting your dividends, you're going to take your dividends out to support your retirement years. But remember this, your investment is growing at 10% and your dividend rate is 2%, which means that you will still be growing your portfolio, but not by 10%. Now it'll be the difference between 10 and 2%, so about 8%. You also have to factor in taxes into this equation, but this is how this calculator works. And this will tell you the amount you need to retire and the amount of years you have to contribute in order to reach that goal. Thank you very much. If you have any questions, feel free to send them below.